Assalamualaikum warahmatullahi wabarakatuh. So today we will be looking at case 2, and that will be Cimb Islamic Bank, the second largest Islamic bank in Malaysia. And the earning for the Cimb Islamic Bank last year, 2023, was at ringgit Malaysia 6.98 billion. So this is second to Maybank Islamic, that earns more than 9 billion ringgit last year. So our main issue today is to look at the so-called reason how the bank is able to garner such a high profitability, which is commendable in the sense that we cherish that our banks are doing well to make decent profits. But then we would like to see where are the profit coming from. And one of the issue raised in our video here is that the loan rate or the profit rate set by the bank is using the money market rate as the base rate rather than using the deposit rate as the base rate. We know that the OPR, the overnight policy rate, is a money market rate which is much, much higher than the deposit rate of CASA, current account, saving account, as well as the fixed deposit rate. FD rate is much higher than CASA rate, but they are much lower than the OPR rate. But then if the bank is using much of their deposit funds to make the murabaha or to make the tawarruk, then they should use the deposit rate as the base rate rather than the money market rate, which they use little in the making of murabaha and tawarruk. So we look at the Bank Negara reference rate 2021 that it says that the lending rate charged to the customer on a retail loan or financing shall be the SBR plus a spread, right? So the SBR is the standardized base rate, and that is the reference rate for the pricing of retail loans and financing facilities from Islamic Bank. And this requirement applies to application received for new retail loan financing facilities, refinancing of existing retail loan and financing facilities, and the renewal of existing revolving credit loan and financing facilities, right? And the SBR shall be set as the standardized, as the benchmark rate, where now the benchmark rate in respect to the paragraph 8.2 up here shall be set as the prevailing overnight policy rate as set by Bank Negara Malaysia, and that it will be 3.3% per annum. So the charging of the loan rate or the financing rate that uses the SBR as the benchmark rate, and that will refer to the OPR, which is much, much higher than the deposit rate of CASA and fixed deposit. So by doing that, I was arguing that the customer is paying a higher loan rate or a higher profit rate because the cost of fund does not reflect the cost of fund or the cost of deposit, but it is reflecting the money market rate, which is much higher than the deposit rate. So as I have illustrated much earlier regarding the factor influencing bank earning, and that will be for conventional bank the interest revenue. So this will be our focus. and that will be the product of the loan rate. As I say, the loan rate is the sum of the OPR rate plus the spread, whereas the interest cost or the interest expense is coming from the deposit rate, which is the lower rate than the OPR, right? So what happened here is that there is an explosion of interest revenue because the loan rate is using the higher OPR, and for that reason the interest revenue will be much higher, whereas the interest cost is using the CASA rate and the FD rate. And maybe some banks, that maybe if the banks are using the money market rate to make murabaha, to make tawarruk, then it can be included as interest expense. But as I say earlier, the amount of the money market fund that the bank uses to make murabaha and tawarruk, is very small for the three largest bank. So we can see here that for Islamic Bank, the revenues is the product of the the profit rate or financing rate multiplied by the size of the financing, and the cost of deposit will be based on the cost of CASA rate, CASA, and cost of FD, which is much lower. So let us just look at the CIMB position, the financing to deposit ratio, where the financing, which we can just catch the data here from the financial report last year, that the financing and advances is amounted to 121.4 billion ringgit. And we look at the deposit. So the deposit is at ringgit Malaysia 110.8 billion down here at the blue arrow. So we can just look at the summary of the deposit account, the size of the deposit before we get into the issue. And we can see that out of the total deposit of 110.8 billion ringgit last year, most of which are coming from the FD account at 80 billion. And then the remaining are coming from CASA deposit, 22.49 billion. So what we see here for CIMB Islamic, we see that there is some kind of concentration of FD deposit, right? So we have FD 80 billion divided by 110.8 billion. So 72.2% of the total deposit are coming from the FD account. So CIMB high concentration of fixed deposit at 72.2% will mean that it is facing a high cost of deposit expense from the high FD holding, which may pull down bank earnings. So that will explode the interest expense for conventional banking. For Islamic Bank, that will explode the cost of deposit expense, and that is what is occurring in CIMB Islamic. So we can see here that the issue at hand would be the fact that the financing to deposit ratio is more than 1 at 109.5%. So meaning that 10.6 billion of the tawarruk and murabaha and ITAB financing is funded by money market funds at OPR 3%, right? So meaning that the bank uses, so based on the size of this money market fund of 10.6 billion ringgit, so it shows that the bank is using less money market fund to make murabaha and to make tawarruk, but charges profit rate on all of the financing product based on the OPR, based on the overnight policy rate, which is much higher. So the larger Ringgit Malaysia 110.8 billion financing are funded by the cheaper CASA deposit and the higher cost FA deposit, FD, at less than 2%. And the cost of deposit is the deposit expense at less than the OPR fund expense. So meaning that the cost of deposit or the cost of fund for Cimb is derived from the amount of money that the bank pays the depositors rather than the amount of money that the bank pay for the money market funds. Of course, the bank uses 10.6 billion of money market funds to make murabaha, but the major size of the financing, which is 0.8 billion, are coming from the cheaper CASA and FD accounts. So the charges should be based on the deposit fund cost and not the CASA, not the money market funds, that is the OPR. So we can say that the Cimb Islamic is pricing its product using the much higher OPR, overnight policy rate, rather than the cheaper deposit rate. So this is the issue I'm trying to bring up. Of course, as I said earlier, there's no harm doing that because this is directed by the Central Bank of Malaysia. And this certainly has helped raise the banking profit handsomely at Ringgit Malaysia 6.98 billion last year. And of course, I was saying that maybe the lower earning of Cimb compared with Maybank Islamic may be due possibly to the high cost of the FD expenses. Because Maybank Islamic, earlier we didn't see the FD concentration, which is at 70% in Cimb Islamic, which is too much. So to summarize, I will say that unfortunately, customer end up as the sole loser from the reference rate framework, as they pay higher interest on their monthly installment when banks are using higher OPR rate as the base rate instead of the lower deposit rate. So the bank makes 6.8 billion profit last year at the expense of the customer who are paying a lot more because that is the regulation. The regulation allow the bank to charge the loan rate or the profit rate based on the benchmark rate, which is the overnight policy rate. The bank, of course, can charge the loan rate or the profit rate based on the deposit rate. But if they were allowed to charge a higher rate, why not? So, nothing can be done. It is Sharia compliant to charge at the base rate of 3% OPR, and that is the case. But at the end of the day, the customer will end up losing this situation. So we do hope that there should be some kind of oversight on this matter. Hopefully we can improve so that the customer can be protected as well in our banking business. Thank you very much. I'll see you again. Assalamualaikum warahmatullah.